If you are a global digital asset executive looking to establish a footprint in Asia, Japan just officially rolled out the red carpet. Last week, the city of Osaka launched an aggressive master plan to subsidize and attract foreign financial and fintech companies. Japan's largest trading house adopted blockchain for corporate treasury settlements, and the key infrastructure builder secured a massive $63 million funding round. Welcome to episode 76 of Japan Digital Asset Weekly. I'm JPYSC of Wakyodo and a venture partner at Ornigi Capital. In the next 5 minutes, we will break down these 3 major developments, giving a special focus to Osaka's massive new strategy, and explain exactly what they mean for your 2026 to 2027 APAC roadmap. Let's start with the most significant development for foreign entrants. Osaka's new 2030 Global Financial City Masterplan. On March 30th, the Global Financial City Osaka Promotion Committee formally revised its strategic blueprint, and the implications for the global digital asset sector are massive. During its first phase from 2022 to 2025, Osaka proved its execution capability by successfully attracting 31 foreign financial and fintech firms, and incubating 653 startups, smashing its initial targets. Now they are doubling down. By the year 2030, Osaka aims to attract 50 foreign financial and fintech companies, create 1,200 new startups, and drive 160 billion Japanese yen in startup funding. For global digital asset operators, this is not just a policy paper, it is a direct invitation backed by capital and subsidies. The new action plan explicitly highlights the promotion of advanced financial innovation. The city is actively encouraging the expansion of derivative products, the issuance of security tokens for real-world assets, and the rollout of stablecoin services. To catalyze this, Osaka is providing direct subsidies for businesses conducting proof-of-concept trials in these exact advanced financial sectors, leveraging the legacy and international network built during the 2025 World Expo. The city aims to position itself as a frontrunner in financial innovation. But Osaka is going beyond just financial incentives. They are systematically dismantling the invisible wall that deters foreign executives, the living and operating environment. To attract top global talent, the city is actively working to invite international schools covering primary to high school education. Furthermore, in a massive bid to strengthen its role as Japan's secondary financial hub, Osaka is aggressively lobbying the Government Pension Investment Fund, or GPIF, one of the world's largest pools of capital, to establish a backup base in the city. If you are an overseas infrastructure provider, a stablecoin issuer, or decentralized finance protocol looking for highly supportive, subsidized jurisdiction in Asia, Osaka is aggressively positioning itself as your prime destination. Second, let's examine how traditional corporate treasury is fundamentally evolving. Mitsubishi Corporation, Japan's largest trading house, announced that it will begin using digital deposit accounts for international remittances in the 2026 fiscal year. They are adopting JP Morgan's blockchain deposit account, or BDA, becoming the first Japanese corporation to utilize this specific platform. What makes this significant is the sheer scale and the operational shift. Mitsubishi will use this blockchain-based settlement service to instantly transfer US dollar funds between its global hubs, such as its financial subsidiary in Singapore and its branch in New York. This allows for 24/7 near instantaneous cross-border settlement, effectively eliminating traditional banking friction and settlement delays. It is important to note that the BDA does not issue new stablecoins or tokenized deposits in the public sense. Rather, it records account balances on a permission blockchain ledger to complete the transfer securely. However, Mitsubishi Corporation is simultaneously participating in joint trials with Japan's 3 megabanks to test yen-denominated stablecoins for international remittances. This proves that Japanese conglomerates are no longer experimenting. They are actively implementing a multi-rail strategy, using proprietary ledgers for US dollars, while testing public-facing stablecoin infrastructure for the Japanese yen. Japan's massive corporate sector is now officially ready for enterprise-grade on-chain integrations. Third, the race to build Japan's core digital asset infrastructure is heating up rapidly. On March 26, Startale Group announced the second close of its Series A funding round, raising approximately 8 billion yen directly from SBI Group. Combined with an earlier investment from the Sony Innovation Fund, this brings Startale's total Series A funding to an impressive 10 billion yen, or $63 million. This capital injection is highly strategic and signals a major power play. Startale plans to use the funds to accelerate 3 main initiatives: the development of the Stream Network, a Layer 1 blockchain specifically tailored for trading on-chain financial assets, the promotion and rollout of JPYSC, a trust-backed Type 3 electronic payment instrument, or stablecoin, and the launch of their comprehensive on-chain super app. Because JPYSC is being designed as a Type 3 trust-type stablecoin under Japanese law, it is perfectly suited for large-scale institutional use and avoids the strict transfer limits applied to standard funds transfer type stablecoins. For global stablecoin operators and liquidity providers, this massive funding round confirms that the SBI and the Startale Alliance is building a fully capitalized, highly competitive ecosystem that rivals the traditional megabank consortiums. To summarize, Japan's 2026 trajectory is accelerating. Osaka is rolling out the red carpet for foreign blockchain firms with aggressive subsidies and institutional support. Traditional trading houses are moving their dollar settlement on chain, and massive funding rounds are fueling a highly competitive domestic stablecoin war. At Wakyodo, as a strategic partner for Japan's regulated digital assets, we bridge the gap between global innovation and the Japanese compliance. Through our Japan Lead as a service offering, we manage the regulatory complexities, go-to-market strategy, and institutional stakeholder relationships, so your team can focus purely on growth and shipping products. If you're responsible for APAC strategy at the digital asset firm, visit Wakyodo's website to set up an initial discussion. That's all for episode 76 of Japan Digital Asset Weekly. If you found this episode helpful, please like, subscribe, and share. Thanks for watching, and see you next Monday.